Good morning, everyone, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, October 10th. Michael Boutros here with you this morning. Peter, Pooja, Raphael, Ziad, Steve, D, Carlos is in the house. Iman, good to see you, sir. Welcome aboard. For today, obviously, we're seeing the dollar index finally give us back the pullback we were looking for. I have some nice plays, some nice trades in play on dollar Swiss. We'll look at that. Aussie dollar, dollar CAD, and pound Oz from Sunday's update. The trades from last night, Kiwi dollar didn't do anything. So that's still holding the weekly opening range. We'll take a look at that. Bitcoin broke out. If you guys remember, if you were with me in the webinar yesterday, we were talking about a key resistance level that we were opening at. We broke right through it. Focus still remains weighted to the upside there. Gold also made a defense of the break of the channel resistance, and I do think you look higher on that as well. From last week's updates, excuse me, right before NFP, we covered euro and pound, and we will go over where both those stand. Euro looks good. Pound, you guys know where I stand on that. I still like the long side, but I just don't know if the low is in place, and I don't really like where it bottomed. I think if it would have gone a little bit lower before the reversal, would have given me a little bit more comfort. But certainly, we'll take a look at where we stand there. So, as always, any questions or trade setups you'd like to review, feel free to throw them out at any point on the message board. A quick reminder again for anyone who's new to the room, there's a camera button right at the top of your GoToWebinar screen. If you need to take a snapshot of any of the charts that we review today for future reference throughout the course of the trading day, feel free to do that. All right, so DXY. Here's where the index looked like on the 8th. I'll show you that update. So even prior to the 8th, obviously right on the 5th, right ahead of the NFPs, we were looking at the index really approaching a critical resistance range, both from a weekly, daily, and Fibonacci considerations, you name it. And it was right there just above 94. 93, I think it was 94, was the low week reversal close for 2016. Take it to the daily chart. You also had a basic 236 retracement of the entire decline, former swing highs, or the concerted August high, and even a longer term median line right there that you're looking at on the daily chart. So inherently heading into NFPs, we were looking for the exhaustion sell-off. We got that, the pullback. Starting the week, we continued to suggest looking lower while below 94. Initial support at 93.50. And we basically just took that out and are testing former trendline support, or former trendline resistance, excuse me, now support, and monthly open support. So here's what the index looks like now. Obviously, the pullback finding a very nice low at that swing low that we made last week on the 4th. Specifically, again, those trend lines that you were looking at on the daily chart, boom. Now support, make or break level. Now, for me, the one caveat is just lower. You have that 2016 low day close, which was a clear pivot in price, which also lines up with a basic 38.2 retracement of the advance and the former 618 of the decline. I'm not really going to get too fussy about this. Let me do this. Actually, let me just drop that 618. And do that. Okay, so scrunch up that region of support with a break below here, basically the 93 handle. That's the break that would suggest, I think, that we're on a little bit more of a corrective course to the downside finally, and also would suggest what, guys? Objectively, a break of the monthly opening range low. Here's your monthly open. You rally into a high. We test the lows. If this holds, you're going to continue to watch that range, but basically a downside break would give us a near-term short bias heading deeper into the month. So it's make or break for dollar shorts here. I would use some caution, okay? You want to kind of sit tight because we just set the opening range right below resistance, so I do like the downside, but you could see a little bit more of a lateral sideways movement here before we start to drift lower. We have FOMC minutes on tap, which I do not think will be a major market mover, guys, specifically this time around because we already got the quarterly projections and the presser with Janet Yellen and all that good stuff. So it's unlikely the minutes will actually provide any new insight on what the Fed is looking at. That said, Friday, you're looking for CPI data as well as those retail sales figures out of the United States. So still like the short side. Here's what the intraday chart looks like again on a wider scope. So break of resistance, test of support. This is the make or break level. Again, a break below the 2016 low day close would really open up the floodgates for a larger decline. So as it stands right now, I'd be expecting some near-term rebound play here, and then I'd still be looking to fade rallies while below the weekly opening range high. As far as well, we'll go over dollar Swiss in a moment, but I've taken off 3/4 of that trade. Stops are well in the money at this point, so if it comes back, so be it. But that's kind of the mentality I'm walking with heading into this session. Um, the extent of which you got this first initial downside move to start the week, you want to kind of pause here and give yourself a breath, excuse me, especially with a lot of these trades coming into some near-term support. So it's a good time for the market to find a little bit of equilibrium before the next move. Any questions on the index here? Okay, so I'm gonna segue. That was number one. Ahead of yesterday's update to Thursday's, or excuse me, Sunday's update, and I want to go over dollar Swiss first and foremost. Has kind of been my favorite trade, and I feel really weird about it because it's dollar Swiss. I literally haven't touched this thing in well over 3 years. No joke. Not even one trade. Just because of the whole SNB debacle and everything that happened, but price action was very clear heading into NFPs in that we highlighted this key area of critical resistance. Okay, you had the 200-day moving average, basic channel resistance, the median line for the current operative structure, which looked to hold so many swing highs, and then even some swing lows here from the initial yearly opening range low. So obviously, not looking for a full-on reversal per se yet, could develop into that. But certainly near term, it was worth the risk for a downside play there. So again, your weekly open, your monthly open, excuse me, near term bullish invalidation levels way down here. So the trade still remains constructive while within this, but there is, in my humble opinion, again, more room for downside. You see a little here, a brief break above 16 momentum. We're trying to break lower from here. So where does that leave us on the trade? So here's what it looks like on the intraday charts. Again, 200-day moving average convergence there. You saw a quick pop up on NFPs on Friday through the median line. Again, quick failure, and basically it was a quick jumper. You had to be in this pretty quick. Whoops. But I kind of got in a little late, but I got a good stop with only about 20 pips against the high, and then we tried to play the downside. Obviously, last week, like I told you, it took off a little bit there. Again, on this breakdown here, I did shave off a little bit more this morning. Like I said, there's only a quarter left on the trade. I was looking for a move down into 97, but near-term price action stopping here at 40 in momentum, and the dollar where it is. Kind of want to soften my load a little bit. If it does get a drop lower, great. I'm still in it. And at the same time, if it recovers, our stops are ahead of the overnight high, so I'm not really worried about that right now. Still like it to the downside, well below 98.33 essentially. Let me just make sure that 200-day moving average is still right there, 98.30 at this point. All right, and look to play just a basic move back into median line support. Now, the one thing I was looking at earlier, I don't want to get the chart too cluttered, but if you take a parallel here off that swing low, this is the reason I was looking for 97 early in the week as a target. Obviously, as you move forward in time here, it's starting to creep up a little higher. So keep that in mind. One other thing I was looking at, if this is just a fake out and where it's going to break to the upside and we're wrong, because you always want to have that assumption and a game plan, then the 100% extension, just a basic sort of correction move, would still take you down to 97.40. That's where I have the rest of my limits now at this point. So let's see if this doesn't have any follow through for it. Okay, it's only Tuesday, so we can't really legitimately with conviction say this is a break of the weekly opening range low, although that would further support our case for a move lower. Any questions on dollar Swissy? It's Swissy, right? You kind of feel dirty just trading it, but the clarity in price is there, so I'm going to continue to favor that one. Okay. That is number two. Number three, I also just wanted to cover Aussie. which is another one that we covered here on Sunday. So here's dollar Swiss, no change to any of those levels. That 100% extension I just added, just keep that in mind. If you're holding current shorts and we do see a continued move lower into the U.S. Open, um, another area of which I probably shave off a little bit more, if not just close the entire the trade. But definitely keep an eye on that 97.40 region as an initial test of this decline. Okay, moving right along is the Aussie dollar. So the Aussie, the premise of this whole thing, where do I start with this? So we started the week on Sunday right here with a near-term bounce right off of a confluence support levels, the 2016 high day close. And then you also had 77.49. Let's bring up that Aussie chart real quick. $77.49, which is the March high for this year. So it's basically the initial yearly opening range for Aussie. So on whole, one thing I wanted just to kind of keep in mind is if you look at this since the start of the year, and again, trying to be as objective as possible. Here, let's do this. Here's the Aussie chart on the weekly. So for a long time, basically the entire year of 2016, once we made that low, the thing has been in consolidation. So let me just harden this line a little bit for you. Okay, that's not what I wanted to do. That's what I wanted to do. Okay, so this consolidation, okay, this breakout would suggest a move higher, a strong move higher, and a real conservative measured move. I mean, you could take this stretch, which is what you want to do, the widest part of the consolidation. But let's just say we take a conservative measured move. A 200% extension. Let's see if I can show the top there. There you go. Would measure this breakout of this multi-year formation into this region. That's 85, 84.50, 80, 85.25. Okay, so the potential for serious upside here is still there, but the breakout, we're looking for support on the way down. So where does that go? Well, I still think you have a little bit lower to go. One thing I also wanted to note is objectively, here's your yearly open. You make a high in the first quarter. You try to make a test for the low in the second quarter. It fails. You break higher in the third quarter, and you look for a late year high. Is that it? I don't know. But on the way down, the initial opening range high for the year should offer some support. And it's exactly what you're getting right now. So the question I find myself asking is, do we find some sort of more rigid support here, or do we in fact get the drop that we've been looking for into 76.29? And that would be a sweet spot. You have the 52-week moving average, slope support, a 38.2 retracement of the entire advance from the 2016 lows, and basic trendline support off of this year's late lows in May converge all right here. Add to that former trendline resistance, the consolidation pattern as support. So I don't want to get too excited on anything on the long side because I still think you can get a drop into that region. But near term, we're at the opening range highs for the year, which could offer some near-term support. And momentum is still trading right about 50. So you don't really have much of a swing in either direction right now on the weekly basis. Fast forward into the daily. Just basic slope support for a formation that we've been following here off the 2016 lows. It's been messy in that we saw the downside break, but certainly the slope has been very, very fruitful. Support, break, resistance, break, acceleration, support, break, acceleration. Lower parallel converged on this embedded pattern. Again, the 50 line right there. 2016 high day close, same level we just talked about, 77.78. So the bounce where we bounce is awesome. Now, before we get excited on anything on the long side, again, below the median line, you have to respect the downside trade. So I'm looking for maybe a drift a little bit higher near term before another move lower, hopefully, to get this thing going. Here's what the Aussie looks like on the intraday chart. So getting even deeper into it. There's that larger formation that we looked at in the daily chart. Again, the 50 line catching perfect support. rebound. I just added this morning. I'm going to delete it for a second, but the rebound coming right off that confluence region. Again, we started the week saying, look, if we get a break below this, you're likely to see this thing plummet into 76.30. Again, as we always say, a downside break of a descending formation typically will be your sharpest part of the move. Obviously, ideally, we were looking for the upswing. Got the breakup of the 50 line yesterday. I do think you have the risk to stretch a little bit higher here, but I'd be looking to fade a rally towards this region. Questions on Aussie? It's pretty interesting at these levels. Okay. Moving right along. If there are no other questions on Aussie dollar, look for a little bit of a bump higher if you can. I think, again, 78, 78.25 would be areas of which, I'd be starting to look for possible pullback off that region. So here's what it'll look like again on the open of the week. We sat here for a while. We set a decent weekly opening range, kind of broke through. So if the initial opening range did break, you want to see this thing kind of hold above the 50 line and look for that stretch towards the median line to get short. Questions on Aussie? No change to any of those levels. Oh, now what I wanted to show you here is that if you take a basic, so again, sometimes it helps to get a closer look at what's going on in intraday price action. So let's say this is just correctionary. And this is, we're just looking for a short exposure on the way up here. 100% extension has already been achieved. So ABC type of corrective move has already been achieved there at 77.96. So that's why I'm more inclined to use this as sort of the weekly opening range. Because if this does hold and this is just the extent of the correction, then we might just collapse lower from here. So something to keep in mind. But again, I don't really have anything pressing that I'm holding anything on Aussie right now, just as a disclaimer. Bearish invalidation, also for the record, would be a break above 78.30, okay, 78.27, this region right here. If you were to see a topside break, that would validate, in my mind, a break of the median line. And certainly on the longer term, that median line rests there as well. You'd expect to see a larger recovery there towards 78. Please show the origin of Pitchfork from 2016 on the daily, says Pooja. You got it. You got it. Where's the daily? So, 2016 January low, Pooja. Excuse me, the high that we made in November, not the high from here, the high from November, and then the low that we made in December. So let me put this right in the middle there if you want to take a snapshot. And if you take some parallels of that, again, a lot of times when the markets break the slope, guys, we have an inclination to be like, okay, that thing is done. I'm going to kind of throw that pitchfork out the window. A lot of times, if you kind of let the market speak to it, the slope has continued to offer some really nice touches. Obviously, most notably, the high that we made here. And this is, a perfect scenario where it's a raised ceiling exhaustion. Market puts in a huge type of pin bar play, misses the upper parallel. Again, perfect signs of exhaustion before pulling back. And obviously, we were talking that entire time about how we were marking radical divergence into that high. And yeah, so I'm going to leave it on for now. I'm not going to really get too hung up on it, but certainly near term was a welcome support bounce there. Okay, got it. Thanks. You're more than welcome. More than welcome. All right. So that is Aussie dollar number 3. Number 4, this guy, dollar CAD. Really grinds my gears when we look for a high to sell in something and it takes weeks and weeks and weeks. It breaks through initial resistance and turns ahead of the next resistance level. So if you're short, I give you credit. I didn't take it. We were talking about this trade for weeks. And I don't know that that's going to be the low per se, but certainly, you're already pretty decent off the high. Almost about 100 pips or so already down. So look for initial support at the monthly open. You're basically approaching that region now near 24.85. Near-term key support 124.15 still remains a level of which, if we break, would validate resumption of the broader downtrend that we've been following off the highs. So it's tough to try to justify jumping into a short from here, guys. So if you're not holding short exposure already, nothing I would chase per se. Nice turn in momentum. We did probe slightly through 60 here, but a nice turn nonetheless. Here's what it looks like on the intraday chart. And here's what dollar CAD, by the way, again, for the weekly, keeping things in perspective on where we are. Basics, basics, basics. Try to filter out all the nonsense you read on Twitter, zoom right out, look at a chart. Basic trendline support off the lows they made in 2012 and 2013, touched again 3 times, 4 times, 5 times, 6 times. The break saw acceleration. Check the underbelly of it as resistance. It's all we've been doing. So specifically the fact that last week, even though we probed through it, we closed below it, gives us further conviction. So guys, what? Always a helpful, kind of quick tool. Bring it to a line chart. Doesn't get much cleaner than that. Support, support, break, resistance. So if this is the resistance hole, we should be looking lower, dramatically lower. And that's kind of the mindset that I'm working with still with dollar CAD. Again, trying to pick a high is always the trickiest thing to do. It's never something that we encourage, but resistance is resistance. And while we made it through the median line here of this formation, basic trendline slope, continues to hold. So inherently, I do like the downside. On the intraday charts, I was looking for a little bit higher of a stab. You guys know I was talking about 2663. If you bring it to the intraday charts right here, 2663 was just at really sweet levels. It was former highs they made for late August. Also converged on that purple slope we've been following just off of this year's highs. So many pivots off that. And it was looking as a really nice region of which I wanted to see a resistance. So again, we didn't get there. Markets aren't in a vacuum. We're approaching near-term support. This is, like I said, the monthly open. Basic channel support looks like it's being tested as we speak. So at the end of the day, if you see a move to sub 24.85, I do think this thing would be back on course. Now, I've been reluctant to do this because I wanted to keep the charts clean, but once we do get a break of this level, if we do yourself a favor, tack on a quick retracement. Whoops. And if you do it properly, not like I'm doing it, you can see some interesting levels pop out. Bring this back to the 240. Okay, and those levels would be 2471, which is just below the monthly open. So watch that padded region there. What I want to show you, the 50. This is the one that I wanted to highlight. I was looking at this earlier today. So keep the 236 there just as a notion. An area, again, give yourself a little bit of a cushion there. But aside from the 236, the 50 comes in line directly with this clear pivot in price we've been looking at. Support, break, saw acceleration, resistance. A little bit messy on the upswing here, but when we broke, we tested it again as support and moved off. It also ends up being the 50% retracement and converges on basic trendline support. It's a 3-point touch. So it's a confirmed trend line, not speculative. So that would be my initial downside target on a move here. If we do get the pullback in dollar CAD, somewhere around 2330, 2340 would be a sweet spot, I think, for near-term support and a target. Hello, Michael. I need an update for Euro. It comes to the monthly opening range today. Yeah, Iman, it's on the list. I got you, sir. In fact, we'll do that next. Any questions here on dollar CAD before I move off? Again, I'm regrettably not in this trade. If you are, Look for 24.85 as an initial support. Wouldn't necessarily, cut the position, but I would do something, bring in your stops a little bit, maybe take off, lighten the load just a little bit. On a continued move lower, you are looking for that dump into 24.19, 24.15, still a huge pivot in price. And then again, that key confluence we just talked about. Critical resistance, still 126.60. Dollar CAD going once, going twice, and sold. That is number 4. Let's jump into Euro as we go through the majors on the open of the week. Here's what Euro looks like. And Iman, another one that played out really well. Now, we had highlighted 2 regions of interest for the Euro. And again, take you back to the weekly charts. We'll do some multi-time frame on this one. Heading into the NFP print, we were talking about 117.14. Now, basically, that's the high from 2015 in August here. But you also had the 50 line for this broad formation we've been following off the 2015 low, 2016 May high, and subsequent lows that we made this year. Beautiful pivot on the median line, break, saw acceleration of the 50 line, and here's support. Converges right on that high. So heading into NFPs, we were talking about looking to fade a dip into this region. Okay, the low max that we wanted to see was 16.16. That was that's that former swing high, and that was for sort of the mark that would open up this drop. But I was looking to fade a drop into one of these levels. Friday gave you that dip. Okay, here's the euro dollar on the near-term chart. Guess what? 1678, the upper part or the upper band of that support range we just highlighted, ended up being a basic 236 retracement of the year's range. So you had even more technical consideration at that level alongside the 50 line of the slope. So long story short, you got the recovery and you closed the week well above. Here's what the intraday chart looks like. You're absolutely right, Iman. It is testing the weekly opening ranges. You got a little bit higher to go, I think. The weekly opening range high comes in like 18.15 or something like that. But here's what it looked like on the intraday charts. And here's what we looked like last week. Boom. Okay, we talked about the week. I even showed you the weekly chart. We were looking at that key region. Daily chart, again, 236 was right there at 1678. And we talked about this. This was our bullish inval. So if we had broken 1620 sayonara to the upside bias, near term, we were looking to fade a bounce off of one of these 2 regions. And then again, the weekly opening range was kind of setting up right above support. So what happened? Here's the start of the week. Dipped right into that 1678 on NFPs, rebounded higher. And again, now we're testing last week's opening range highs. So again, the monthly high, if it gives out, you still look for 1830, 1880. And this is the big zone of resistance, would be way up here. I'd highlight that in red, critical zone. But, again, in my humble opinion, you could get a pullback here, but you sort of still want to stay constructive on the euro. Again, since the start of the week, there hasn't been fresh entries, and I noted this in the report yesterday, guys. To start the week, the majors have been kind of hard to trade if you didn't get in on Friday. Friday offered a perfect opportunity for dollar Swiss, dollar CAD, euro, obviously. So don't go chasing these moves because, again, you'll get an opportunity, I think, on a pullback to play them again. But near term, I want to stay constructive of the euro, at least while above the weekly opening range. If the weekly opening range breaks, you might be worth it, again, if you're really near term, to play the downside, but more likely I'd be looking for the drop again to possibly find that final support we were looking for last week for a long. But near term, with the dollar index where it is, again, it wouldn't be too surprising to see a little bit of a softening here, a little bit of a recovery to open up the US trade before dropping lower. Again, that would give the euro a little bit more of a pullback near term. Iman, does that make sense? And with respect to the monthly opening range, obviously, if we do see a break, like I said, the opening range high comes in at 1815 or so, 1818. But just, 1830 is just a good region. We don't want to be too rigid because there's obviously a pivot in price here. It represents the 38-2 retracement of the decline. You have former swing lows, and a swing high. So don't be too rigid with it. But yeah, if we were to clear 1830 on a closed basis, in my mind, I would consider that basic and objective monthly opening range break. Make sense? Here's what it looks like on the 120. Again, you're seeing that some of that peak into overbought territory, so be careful there near term. And I don't want to clutter the chart too much, but you always want to see if you can give yourself a little structure to the advance. You know what I mean? And if we do something real near term like this, you can see the slope has offered some resistance. The breach of the median line saw a further upswing. So you kind of want to look for support right where we were looking to target on the upside. This was the initial target that we highlighted. Well, this was before the low was made last week, but yesterday on the webinar. So the pullback, you'd look for former support, as it were, to become resistance, or former resistance to become support. Okay, that is euro dollar. Number 5. Number 6, sterling. Little bit of a frustrating trade for me again near term, just on account of, I didn't really like where we turned from. So look, it is a basic 38-2 retracement. I'll show you on the daily charts better. It is a basic 38-2 retracement of the larger yearly range. So it takes into account all of 2017. Iman says, absolutely clear. Cheers, Iman. Yeah, let me know if you have any other questions, my man. But it was a clear 38-2 retracement that took you into 30-20. So we didn't quite even make it down there, right? And this thing turned right ahead of it. Could be a lowered floor. You had the 100-day moving average there. You had another 618 key retracement just off the advance from the low you made there in June. So that's would have been a bit more of an acceptable rebound low for me, except the fact that we didn't even quite get there. So from a positioning standpoint, from a trading standpoint, we never got into a level of which you would consider an entry. It turned right ahead of it. So again, unfortunately, we know we've been looking for sort of an exhaustion low in pound. Was that it? I don't know, because it wasn't at a level that I was really highlighting. It just missed it. So little indifferent here, a little bit more neutral near term on the pound. I can tell you the broader picture is still really bullish, guys. I would love to be on the bull side of this. I just, I'm not going to chase it from here. At the end of the day, you're still in the confines of this upslope. And until you are, you got to continue to respect the upside. Here's what the intraday charts look like. Oh, and by the way, the weekly. I'm sorry to keep going back and forth, guys. But the weekly charts have all been kind of updated this week, so I kind of wanted to keep you abreast of where we are. Look where we turned. Okay, highlighted this level a couple of weeks ago as we were breaking out as the bullish invalidation level, and I meant it. That's the high week reversal day close, obviously prior to the new high that we made. But it converged right on slope support. That actually did get tagged, and that was at 130.36. The low that we made was 130.27. So we just probed into it before turning higher. In my mind, once we clear 32.69, we're back to the races. And again, although we turned just ahead of the high day reversal close, obviously the whole Brexit debacle at 136.75 is still the level to beat for resumption of the broader uptrend. Again, remember, it wasn't the cleanest, but a little bit of a consolidation. The basic break here still going to be that longer term trend line off the highs from 2014. And that's what's being tested yet again as resistance today. So watch where this settles the week. Again, the daily chart, you're seeing that rebound. This is the intraday chart, but on the daily chart, you're seeing that rebound. I don't have structure to the ascent here, which is why I don't, I'm not going to advocate this as a current trade I'm, personally looking to get into right now. So we'll see if we can't get clarity. Here's what it looked like, just for the record. Last week, we even highlighted that weekly chart saying, look, that, 30-36 barrier, that's it. And if that gives out, we're out. Specifically on a weekly basis, and it was held on a weekly basis. There's 30-20, the confluence I was looking for. We never quite got it. Turned right ahead of it, right? 7 pips ahead. Here's the intraday chart. Downside break of that ascending median line formation we were working with for a few, I guess I could say a few months at this point. The spill obviously saw that 30, just turned ahead of 30-20 before the rebound here. So basic slopes off the high. I was showing this one as well earlier in that report, just a parallel of that. Does kind of give you a little bit more of an upside swing here before you run into any major resistance. So how to trade it at this point, you'd have to wait for more of a pullback that you can get a stop against this and be comfortable against this low. And you're still looking for that rally towards 32.70, 32.90 for the real resistance break to mark resumption. Any questions on the pound? I feel like I've been talking about this for a minute now. Okay. So that is pound dollar number 6. Let's take a quick roam around back to last night's update. Of course, not much play on the Kiwi. It's been, I'm just looking for it. If you guys remember the previous update, I didn't really have much to say. The previous update, all I wanted to highlight was that the daily chart was coming into this sweet resistance support confluence. Okay, you had the low close for September, and I think that was September open actually. You also had the 200-day moving average that you see there in green. You had longer-term parallel slope support and the 50 line for the current operative formation just off of this year's lows, all converged right there. Big support barrier, right? Big support barrier. And momentum was, more or less trading at 40. So if you were going to see the break, you'd look for that dip into 70-100, 70-90 is the lower end of that level. On Kiwi as sort of an initial target and a big region of support. Well, it broke. And when it broke, boy, did it give us some fuel. Okay, here's what it looks like last night. Let me show you on the daily chart first. There was the break, straight shot down, took out 70-90 real quick, and we closed the week below it. So you head into the start of this week with an inherent short bias below 71. Ideally, you get a drop into 70. 70.07 is the 100% extension. Just lower, you have the 50 line for the descending slope and the 2015 basic trend line support, all nestled down there. So I do think Kiwi still has further to go. Obviously, I'm not a real big fan of dollar strength per se, but here's what the intraday charts look like. This thing has set and is setting and is sitting within the confines of its weekly opening range. I keep doing 204 instead of 240. So here's the weekly open. You know what I mean? It's a solid weekly opening range. You made a high. You failed again at the high. You tested the low, failed, tested the high, failed, tested the low, failed, and it keeps snuzzling over. At the end of the day, this is my near-term bearish invalidation. So as long as we stay sub 71, I am looking for that drop down towards 70 and 69.90. These sort of key cluster region here of both Fibonacci considerations and median line support. And if you're wondering where that slope is derived from, it's just a slope right off the highs. That's all it is. Trendline resistance, take a parallel, extend it off that low. Kind of gives you the possibility for a soft target here, which is why I noted in last night's report, a soft target at 70.40. Just want to see a reaction there maybe, but take some off the big levels, 70 into 69.90. Questions on Kiwi dollar? Okay, so that is 5, 6, number 7. Number 8, a quick look at Bitcoin, which is another one that I covered last night and something we've been following since last week. So here's what it looked like earlier in the week, right on or this was earlier in the month, last week, we were talking about this major resistance level, wanted to stay constructive. We came into a big level from a structural standpoint, right at 44. So, these were the targets on the way up, was 42.20 and then 44. On the way here, pullback, we didn't play the pullback, but we wanted to see sort of either a hold here or a drop into the median line to get long. We pulled back and we probed below this level twice. But guess what? You didn't make any daily closes below. And once you launched through this region, you were off to the races. Again, descending slope breaks to the upside. So you look for 45.99, 46.60. That's where we opened, okay, the week, trying to see what was going on there. It just popped right through. Okay, so here's Bitcoin as it stands now on the daily charts. Okay. What was the technical significance of that region? Well, very simple. You had the high day reversal close. Not only that, it was an outside day reversal close, tend to be technically significant regions. Also, if this was just corrective and the bottom or the downward trade was certainly a reversal of trend, this should have held. This should have held. So obviously, as we said, the top side break is what we favored. There was the hold of support. Once we break the top side, that was the initial target, secondary target right there, which is the record high that we stretched in Bitcoin prices at 49.79. A break higher from there, now you got to start extrapolating price because we haven't seen price. There's no historical price action up there. So you have to start to look more at extensions and structure, and you look for 53.70, 80, basically into the 54 handle as sort of a target on the upside if we were to break this region. Near-term support, right back at the median line. It's been a very clear pivot in price. So as long as we stay above the median line, you want to maintain a constructive approach here on Bitcoin prices. Near term, here's what the trade looks like. Even within the confines of that larger encompassing median line we were looking at on the daily chart, look at this. Beautiful. Beautiful pitchfork off the low. This is called a modified pitchfork. Okay. There's shift and there's modified shift. They're just different degrees of adjusting slope. So this one's just actually a basic shift, which just takes actually trendline support and follows it and adjusts that tilt for you. So if we look at that, the slope that it produces is phenomenal. Median line. We saw a probe with the median line here. I let it go. Saw the probe with the median line here. I let it go. If we take a parallel of the same slope and extend it off that high, guess what? Turn just ahead here. Perfect kiss yesterday. And that's why I thought we would get a little bit more of a pullback. I was looking to get long again here if we could have gotten it. But, there's really nothing to suggest that you need to be, too overly concerned here. You are in overbought condition, but that can stay in place for quite some time. If you're not holding longs, do not jump in here. You'd want to wait for a pullback, ideally towards 46.25 if you get it. I don't think you get it that low. Basically, look at that 50 line for this embedded slope. So clean. Support, break, saw push into the lower parallel. That rally found resistance. Once we broke, was support, median line. Could pull back into that again, but basically you want to see a break here targeting this upper parallel, and then a continued move higher takes you into, believe it or not, 53.75. That's sort of the next measured objective target for the upside if we were to break the record highs. So super interesting price action. And what's interesting is you're not seeing it happen across the cryptocurrency block. Okay, so if you look at Ethereum prices, this was number 8. I'll just add Ethereum as number 9. We talked about this briefly in the webinar yesterday. These are things you want to pay attention to, guys, in related and correlated assets. When you see divergences in what's happening in price. So obviously we just looked at Bitcoin, which made a fresh high for the month. Okay, and certainly, it's an early break, I'll grant you, but it's an initial break of the initial monthly opening range. Ethereum has been sitting in its monthly opening range. So When you see these divergences, sometimes they can be a nice tell on an exhaustion in trade, in bias. So either, you know, Bitcoin is lying on the way up here and it's going to see a nice fade opportunity, or this is lagging and we should actually be looking for a pullback to get long again. I have more of the mindset that this is lagging and we want to see a topside break here to target 350. That said, I'll maintain a near-term constructive bias while above this region. Clear pivot in price like clockwork. Resistance, break, saw acceleration, instant support. We sailed through it on both sides of the trade, again, suggesting that there's a very low tolerance level there for price. And that's going to be my near-term bullish. I guess I want to stay constructive here. Bullish invalidation for the broader trade is still down here. It's still down here at 324. Excuse me, 234. A little dyslexic. Does that make sense, guys? As far as intraday price action here, I don't really have a compelling near-term setup for Ethereum. I didn't want to just throw this out, but here's what I'm looking at. And it's basically governed by 286 and 312 for the last, I don't know, what, 3 weeks almost. Okay, so look for a break of that 286, 312 region, 320 being the upside break in my humble opinion. Again, that would validate a much more significant low is in place, or would suggest that a much more significant low is already in. So a little bit different of a play from Bitcoin, but broadly speaking, still liking or favoring a topside break of this near-term range. Any questions on Ethereum? That is number 9. Number 10, let's go over a gold trade, which has been very popular as of late. Everyone has their own predictions on what the heck is happening in gold, and we just follow price. So we try not to get too wrapped up with the stories. Long story short, 618, basic retracement of the yearly advance, off of the July low of this year. You also had a larger 38.2 from the entire advance from December, and that gave us a range of 1263 and 1267 as near-term support. We closed one day in that region. Next day tried to probe below, and obviously the reversal there on FOMC took us right back higher on a reversal day. On that break, okay, you made a break of this channel, which we've been watching for weeks. Was this the gold update? Yeah, we did it yesterday, right? Here we go. So this was the upside break of that descending channel we've been watching for weeks. Again, 927, going back almost 3 weeks here. We were looking at this channel, looking for a dip into 1270, and ideally, you would have gotten a little bit lower, 1263, which was a nice confluence region. Well, it took way longer than expected, so it was no longer a confluence, but 1263 nonetheless did offer that rebound in price. So last night, I highlighted this, guys, this near-term slope. And this is just something as a drill that I wanted to share with you today. If you notice, it wasn't on the 240-minute chart, but it was on the 120-minute. And, when you see something like this, as short-lived as it is, it can still be a tell in price. So, the reason I kept it is because the pivot on the median line was perfect. The turn was just ahead of the upper parallel. The pullback was at the 50 line, and that gives you conviction. Topside break of an ascending pattern would typically be a sharp move to the upside, and that's what I'm expecting further. So I am looking for 1297 on gold, 1300, 1297 region as a target on the upside. Last night, I told you that the bullish invalidation level was the weekly open. At this point, now that we've broken the upside, I'd actually be pretty comfortable bringing that near-term bullish inval up to here, 1280, and looking for the recovery in gold to get a little bit more upside before all said and done. But I like to do these kinds of formations, especially when you see a break of this channel. Remember, when we break these channels, I don't want to see price sit there and I'm going to break, I'm not going to break. I'm going to break, maybe not, right? I want to see that thing fueled, because that's the whole point of seeing a break of formation. It triggers that cascade in price. long story short, when you add a formation like this, it can give further clarity because now you have a little bit better of a consolidation region to look for. And the break here certainly, again, my humble opinion, keeps the focus weighted to the upside, while above 1281. Questions on gold? You're seeing the whole commodity block actually see a pretty decent move. I mean, I was just looking randomly here at silver today. That's way radical stretch. It's funny because that's basically testing a near-term resistance level here. I haven't really covered this chart, but the break below 1750 last week was kind of the onset of a major decline. But there's the 618, just like in gold. Perfect tag reversal. And now we're checking those former swing highs. So again, I would expect to see some pullback in silver, but you do want to stay constructive basically above 17. If this breakout is legit. Iman, thank you so much for clearing that up, and I do apologize. So Iman, it's great to see you. She says, I'm welcome. I'm new to SB. In the long-term page, I see pending trades. Does that mean to put my entry order at that level, which is stated in the pending trade, or what? Yeah, Iman, that's exactly what it is. As for your second comment there, I do apologize. Welcome aboard. So yeah, when you go to the long-term page, guys, it's important to keep in mind that me and Jamie work on completely different strategies. We're always basically looking at the same longer-term picture, but I might have a little bit of a near-term bias against his long-term outlook, and that's where you guys get the benefit. So if you are trading on the swing trades and you have a trade open on say euro, and I put out a euro intraday, it's not necessarily don't mess with euro if you're holding the swing. But if you're not in that, then you have the option to get a little bit more near-term price action. We try to cater to whatever strategies you guys are working with. But Iman, if you go to the long-term charts, there's a swing trade tutorial. I would encourage you to go through that, and it kind of walks you through exactly what Jamie's reports look like. But yeah, if you go to the swing update, the pending trades, these are the orders that you guys want to put in. So you have your entry, your stop, your target, and that's the trade for the next day. Let that pan out. Okay. Any changes that we were to make to this would come via way of SB Squawk. So Iman, make sure if you haven't already, I'm not sure if you did, but make sure you submit that SB Squawk form on the homepage. If you go to the homepage, SB Squawk sign up form, just complete that. And then after you've completed this, guys, you still have one more step to do, and that's just submit a request through Twitter to follow. So once those two requirements are filled, you get access to the SB Squawk on a personal device or your computer or whatever, aside from just when you log in. All right. Hope that helps, Iman. And welcome aboard. It's great to see you. Cheers. Okay. And last but not least, if there are no other questions on gold, I just wanted to touch base real quick on pound Oz. This was also a setup that I highlighted on Sunday. Well, actually, there was, this was last week. I might as well show you this one first. For pound Oz, this is what we were looking at. I don't know why this chart sometimes doesn't want to show. Okay, in any event, sorry about that. From earlier in the week, here's what pound Oz looked like. So we were making this test of resistance, and basically, we were looking for this support bounce. Now, ideally, I wanted to see it drop into this region to get long, but we highlighted the week saying, look, 167.21, 169, that's the region to look for. Look for the break. Obviously, a topside breach was favored in our scenario. And the question was, how do we trade it? Ideally, like I said, you were to get a drop into this and then see the breakout. That didn't happen. Market decided just to make a run towards that resistance target. And then once we broke above, you look for initial support there. It's exactly what you've gotten. Pound Oz with the upside break of the channel that we were looking at. We tested as support, and we've been sitting there now. Now, I'm not going to lie to you. We haven't been able to get much momentum behind the bounce. And in fact, momentum stalled right at 60. Coming from oversold or sub 40, that would suggest that, you still have further, possibly a downside play, actually. That being said, I still think you look for a stretch into another high here before this is all said and done. So, key resistance is still 70.80 to 71.20. Key support is still going to be down here into 67.30 now. So former trendline resistance, might be a drop into that again where we were looking for earlier to get long. Still might be the scenario. Long story short, based on my views on the Aussie and sterling, I do like to favor the upside here. So don't currently have anything on this, again, unfortunately, but broadly speaking, still constructive above 67.30. And that is pound Aussie number 11. All right, that's everything I have, guys. Did you have any questions or trade setups you wanted to follow up? Please feel free to throw them on the message board. Again, we're pretty quiet on data. Not really much to worry about today. Tomorrow you get the FOMC minutes, and on Friday, like I said, CPI and retail sales out of the United States will probably be the biggest releases. But till then, we'll continue to follow price action accordingly. All right, no other questions. Going to wrap it up here. Guys, we will see you tomorrow morning. D, dollar yen. I knew someone was going to throw dollar yen at me. Look, for dollar yen, if you put a gun to my head and tell me what to do dollar yen right now, I would say go short. But that's not how you trade, right? That's just my personal humble bias. I don't have really a compelling setup here. Sorry about that. I don't have a real compelling setup here. This is what I showed you guys last week. I try to figure out near-term patterns in price to really give us a little bit more of a tell. So we were talking about this in the webinar. We turned ahead of the upper parallel, could be a raised ceiling type of deal for an exhaustion pullback. This trend line here had 3 tags. So we were like, all right, look, if we break this trend line, cool. Look for a play down into this region. But that's really the break you need to see to get the larger turnaround picture, let's call it, for dollar yen. So what happened? You actually broke that trend line. You came back and tested as resistance. You came back and tested as resistance again. And here's the move lower below the parallel or the median line. So, objectively, here's your weekly opening range, super tight, 112.30, 112.80, 50 pip range. Again, this is the break I would like to see to give you the onset of a larger decline, but I don't really have anything compelling here from an intraday standpoint. And the range is so tight, D, that it's just not forgiving. If you put your stop too tight, you get stopped out. And at the same time, your limits can't be that far out because the range is so tight. So I don't really know how to trade this per se. I do think it eventually turns over, but as I always tell you guys, knowing the direction is just half the game. We need to have a viable setup, clear cut, stop. So I'll tell you what. One thing I would be tempted to do, D, is if you were to get a rally back towards the median line and it fails. We're talking about such tight price, but if that were to happen, try to take a stop against the weekly opening range high. It would be a nice tight stop for the move down. But you can't get short here because you're looking for support or you're looking for validation of a reaction there. Your stop would need to be all the way against the highs. That's only a couple pips away at this point. And same point, I'm not looking to take a dollar long position. So D, I hope that offers some color. Again, not really a fan of this trade right here, but if you look at this thing even on a weekly chart for dollar yen, you haven't gotten a close above that trend line. Bring it into a line chart. So could that be a turn from resistance? Sure. Momentum's been holding sub 60 all essentially since the start of the year when we first broke below. So I'm inclined to look lower. Do I have a setup on it per se? Not really. Does that make sense, D? Okay, says yes, thanks. You got it. You're more than welcome. So we'll throw dollar yen on there just for color as number 12. All right, guys. If there are no other questions, I'm going to wrap it up here. Thanks for everyone who attended. I will be back and see you bright and early tomorrow morning. Don't forget, shortly after tomorrow, we'll also have the midweek strategy webinar there with Jamie. Go over a little bit more of the longer term implications of what we see going on here as we start off Q4. Till then, best of luck trading, and I will see you all tomorrow. Cheers.